Nalu FM Finance Podcast. Insight into the financial markets.
It's very, very seductive and attractive to optimize your portfolio. But don't forget, you have no idea what's coming in the future. Leave a bit of slack, because otherwise it's going to fail.
This podcast is powered by Vesta, the engine behind active management. Vesta is a Switzerland-based fintech startup that provides software for issuers of actively managed certificates to automate their value chain fully. Visit Vesta, VESTR.com to schedule a meeting with an expert and to learn more about Vesta.
Good morning. I'm here with Kronseder. He's the CEO of All Index, and we're going to talk a lot about indexing, as you can tell from the name. But first of all, thank you very much, Christian, to be on the call. Now, I always like to ask people in the first stop, what actually inspired you, the founding of All Index, and how, you started with an idea, and how did actually the vision over time had to adapt to the market, or your application in a sense changed?
Well, hi, Stefan. Thanks for having me. So, what inspired the founding of allindex.com? So, like you, I have a background in structured products, and all the guys that are involved in All Index, they all have a structured products background, because we felt that there is not enough technology to help structured products desks to create baskets and indices quick enough. There's this lag, and I'm sure you have experienced this as well. So you have this great Delta One idea. You go to an index provider, and it takes 6 weeks to get an answer, although you could issue the product within the day. So that was some sort of the initial, the core where we said, well, we need technology around it.
And that's where all the innovation right now in structured products is in the underlying, not in the payout.
Exactly. So we were a bit too early, because we did this 4 or 5 years ago, where it was I have my spreadsheet, but our spreadsheet have a few issues.
I always say, show me a spreadsheet without a mistake in it.
Yeah, there is none. So that's it. So now, what has changed? What has changed in the meantime? So one thing is, we learned an awful lot about the buy side in the meantime. So asset management, passive investing. Well, we know what passive investing is, of course, and fund management. And we suddenly realized, well, hang on, this problem is not only a problem for the investment banks, the sales side, to create the products quicker, but there's some sort of general problem of, how do I bring an idea into a portfolio? So we are basically a laboratory of creating baskets, indices, portfolios, whatever you like. We don't care. Where you can have, well, here's my idea, and this is what I would want to try. Or here's a model which I would like to change. Or here's a set of ETFs which I'd like to build into a certain set of exposures for my clients. So this is how it changed from a single stock basket, very concentrated, to actually you can try a lot of things. And I think the best way to describe it is from very focused on baskets now to laboratory for R&D. And then we hand it over to whatever you like, PMS, OMS, or we do it for you.
Fantastic. Now, you told good about the company, but what actually drives you? And can you tell our listeners a little bit something about you that maybe most people don't know?
Well, I think what really drives me is, and I really get a kick out of this, is solving hard problems. Honestly, I was I have a solution now. I really feel very good about it. This is, I don't know, if you ski, the feeling is similar to going through some sort of a deep powder snow type of line. Exactly the same feeling for me.
I do ski. Yes, I know the feeling.
So that's what it's like. I'll problem solve like ski.
Okay. So you mentioned, you see All Index, what you offer sort of as a laboratory in which people can conduct R&D. So is All Index then actually also still an index provider, because the name index is obviously in the name? Or
so we are not, and we very early in our journey realized that this is actually not a really smart idea. Because there's tons of index providers out there, the big brands everybody knows, and the smaller brands that are super happy in their niche, and wherever they want to compete. We also realized, if you really want to compete effectively against the brands, you need an awful lot of money because it's a brand building exercise. It's not so much a technology exercise, but it's a brand building exercise. And nobody's going to give me like $50 million to build a brand.
Yeah, and nobody got fired ever to invest into an S&P index.
Exactly. So this is where we then early on in the phase realize, oh, actually, it's a technology play we want to do. And everybody can use that. So you could give this to one of the big brands, to the smaller brands, and help them to grow certain parts of the business. So if you want to enter like wealth management, good examples in the States, direct indexing, tax-driven indexing, tax loss harvesting. This is one way how you could address the market with this. You can roll this out to hundreds of thousands of users and it will perform. The backtest, the changes in the model and everything else. So we're not, we have the ability, we have the operations team, we have the technology, but that's not our core business. Our core is like R&D.
I see. And what are sort of, let's say, the top 3 benefits of what you offer, and have they maybe changed over time? You found out suddenly our clients are using for something that was unexpected, which we didn't have in mind when we built the whole thing?
Yes, there's a couple of things that I can give you the anecdotal evidence, but the really 3 top benefits on this are it's fast and intuitive. So you don't have to be a quant in order to build indices when you use our tool. And if you want to be a quant, we can help you too. And what we found over the last, let's say, 12 to 18 months is that the combination of investing and AI in the sense of research support is something that a lot of people value. And we had this really, really interesting experience that we were building we have a search engine that helps you in building thematic indices really quick. And one of our clients didn't use it for listed stocks. He looked for startups. It's like, hey, I'm looking for quantum computing startups.
So you went to the private market.
Absolutely. And we were totally surprised because we did not build specifically for outside of that, but we thought it would be. And then you should look what I did. I'd created a research report of quantum startup in Karlsruhe, Germany. And it contained everything: shareholders, SWOT analysis, whatever you like was in there. It was like, oh, that's interesting. So we keep this in mind. So we're expanding on this at the moment. But coming back, the top 3 things are: it's intuitive, it's fast, and it's AI supported in the meantime.
I mean, AI seemed to be, people are using it now in the index, or the picking of underlyings in the basket, whatever the differences between an index and a basket, is sort of this active versus passive. The lines are getting very blurred in a sense. Yes. Is that a challenge? Because how do you position yourself? Maybe everybody wants to put you in a bucket. You do active management, we do passive management investment.
So we are closer to, but honestly, we are closer to the passive market, because this whole, at least where we are. So we focus on the wealth segment. So we're not doing any institutional business. This whole discussion about, we're going to have like totally hyper customized portfolios for every client, does not really materialize unless there's a real reason. And the only reason I've seen so far in the States is tax. But here in Europe, if I have some sort of a certain preference, I'm not going to build my own index or my own thing. So this is going to go away. So that's why passive investing for us is right now a bit more interesting. Of course, we can do this, but we're really more focused on the passive part.
You already touched on it, but maybe you could go a little more. Who sort of is your ideal customer and user of it?
So on the sell side, it's the investment banks and structured products. On the buy side, it comprises of investment advisors in the broadest sense. And the third segment we're really, really like to get more traction is the index providers.
So you see, okay, that's interesting. So you don't see the index provider as your competition. You could help them in a sense.
Totally. So
I think that's something it's good to clarify here. And can you sort of give maybe how these people then use it, the IB and or structured products people in the investment banks and the investment advisor, and maybe also the index, the traditional, call them index companies?
The discussion with the structured products providers is much easier because investment banks are more tax savvy. So if they see an advantage in the platform, they usually they always take a close look at it, and then they might adopt it because
Mhm.
it gives them more business opportunity. So investment banking, in that sense, at least structured product area where you and I come from,
It helps when you speak the same language.
exactly. So that's one thing. So I talk and walk like somebody out of this area, but it's a competitive area. So innovation is one of the key things you have to have. We're finding this. On the financial advisor side, we see that a lot of them use these customization capabilities or research capabilities in order to justify their existence. And I don't mean this derogatory at all. But if they face the problem of like, well, if I give you iShares or Vanguard or Amundi ETFs, the client will ask very clearly, so what is your value add here? You charge me 80 basis points for a service where I can go on the next website and buy it myself. So they have to have this capability to really innovate in the way how they service the clients. And this can be, amongst other things, this can be in the way, hey, here's my idea, or I can build you the Eurostoxx 50 in a different way that you have less risk. So if you're quite sophisticated, or I can build you the S&P 500 with any tech stock or any oil and gas stock.
Or already the stocks that you overexposed because you might be a person who actually got through their job a lot of stocks in one single company. No, I think all the digital options give so much more. You can personalize the wealth management offering.
Absolutely. Now, for the index providers, then that's the last item. So index providers go through a slow but steady change from product-centric to client-centric. And this is, if you're not product-centric anymore, then you need to have some way how you can communicate with the client. So this is where platforms like ours and others come in, where you suddenly can roll out to the clients stuff that you don't need it to. Eurostoxx 50 is Eurostoxx 50, S&P 500 is S&P 500. But if you suddenly have a client say, I'd like to have a bespoke version of that, or I'd like to have a totally different version of that, you suddenly find yourself in a squeeze because you don't have enough people to do the back testing, and you don't have anyway. But if this becomes more and more the norm, then you need to have a platform. And this is where the discussion suddenly starts. And you have interesting discussions in the sense like, oh, I'm index provider X. My rulebook is so complex, you will never, ever be able to put it into software. I'm like, okay, well, it's a nice challenge to have, but that's a bit of a weird argument not to use those platforms.
I think if you look particularly at the very long-term and traditional index providers, they stack technology on top of each other, and there's a lot of effort to maintain this. So I understand their challenges, and so I think sometimes they need to look at people like you and bring that capability in house again, or use your software for it. I agree.
That's one of the bets we're making. Absolutely.
Yeah. Yeah. So is that sort of what do you think is the biggest opportunity when you look at the market for you?
The biggest opportunity for us is and I'm just off a really interesting call with a company that characterizes their clients using behavioral science. So the capabilities we have that we can create based on certain information portfolios I think that's for us the biggest opportunity. So what we're discussing with them is like, so I have these buckets of archetypes of investors, but I can't create the portfolio for them. So we can take this and either use a little bit of AI magic or not, depending on how they want to have this, and then create portfolios that are part of this behavioral traits these clients show. So the ability that we can do this R&D thing is actually bigger than we thought in the beginning. Yeah, because you have multiple entry points.
Yeah, would it be possible to give an example of an typical something? How somebody behaves, and then how that does it translate in what he wants to invest.
Yeah. So one of the archetypes I have, so you client, you are somebody who can take more, you can still make more risk, and in like growth stocks, but you're not into blue chip growth stocks like the Mag 7 or something. So this means this person is more interested in small and mid-sized entities, SME, small cap, mid cap. So we can just take out of our data lake we're having. So we propose 2 or 3 alternatives in a portfolio. We say, okay, so we'd like to have exposure to US, exposure to Europe. If we do everything equal weighted, this is one of the portfolios you have. You get a back test, you get a fact sheet. Within like 20 seconds, you have everything on the table where you can show this to your client. Say, hey, this is how it looks like. What do you think? So you can have this workflow discussion, or you're in the flow discussion with a client who says, okay, now I understand what you want. These are your traits. This is the portfolio that might fit your traits.
Now, you've seen now probably hundreds of people trying to design their basket, their strategy. But what would be your advice when designing something like a rule-based investment strategy?
Don't overfit and don't over optimize. It's very, very seductive and attractive to optimize your portfolio to those, oh, I have a massive, massive outperformance vis-a-vis any benchmark I've ever seen. But don't forget, you're optimizing against a regime that's in the past, and you have no idea what's coming in the future. So leave a bit of slack for your trading strategy or your index, because otherwise it's going to fail. That's one of the key components. And if you do not really understand why you're doing this, then please don't do it. That's the other thing we've seen. So I have optimized the CAPM, and it's like the variance is like crazy and everything. But then if you run this against real data in the wild, then mostly it fails.
Yeah, if you don't understand the reason why it works or why you're looking for it. Yeah.
The other thing that we found, and that's a bit outside of the index business, that when we're talking to people that are not really into it, one of the questions we really go, so is indexing really profitable?
Okay.
And the answer we always go like, if you have a Bloomberg terminal, just check out NDI and their profit margin.
Yeah.
Then then we don't have to discuss anymore.
Yeah.
So that it is a niche. It really is a niche already in a niche. So it's difficult to explain to somebody outside of this area to really why this is sexy. So that's the other thing that that we see as a misunderstood about the index business. So that's some sort of to build, but also to comprehend.
Yeah, makes a lot of sense. People more and more, when AI is part of that, what helps is dealing with more and more data. But in your experience, does more actually data improve the result, or how do you sort of get the best possible result?
So when building an index, you have to have a plan. I think more data as such don't really help you. So if you are not really clear on what do you want to achieve with this, so is it a certain exposure you'd like to create? Is it a certain improvement over other indices you'd like to create? And I give you an example. I rarely see an index that is weighted based on per capita GDP per country. But this makes a lot of sense because you could assume a country that has a high per capita GDP should also have super profitable companies. And if you look at the back, it's crazy. It's crazy what comes out of there. Switzerland versus Germany, for instance. Yeah, there's a consistent outperformance in certain stocks here. So then once you know what you do, then more data might be helpful. Absolutely. And then also depends on what do you want to bring in. So you can, of course, everything is somehow connected to each other. But does it make sense to have this entire network of dependencies? Or you say, well, there's certain risk factors I'm comfortable with. I'm sure I oversee certain ones and others I disregard. That then comes down to how much do I understand about markets.
It matters the data you use to train an AI model is
Exactly. When we talk about AI in general, there is this idea of AI is going to take over trading. I think you as a former trader, you probably could disagree more to that.
Yeah.
Because it is the ability to anticipate or understand where there's a regime change in the market is something you cannot currently train into an AI because there's not too many regime changes that are there to train the AI properly.
Yeah, I think the challenge here is often that, the investor's memory is probably 18 months long at best.
Yeah.
Yeah. While in order to be statistically significant, we have to go significantly further back.
Exactly. And this doesn't exist. So in that case, more data doesn't help you here.
I mean, one of the data points that's more and more obviously being also through regulation is coming through is ESG, the environmental social governance. But does it actually have an effect? Is it meaningful in the investment, if you can comment on it?
So we have an open platform. So if you have your own ESG framework or an ESG provider, we can put it on our platform and they can use it as we would like to use it. Now, the challenge I see with ESG, there's manifold. So one is, if you look at the number of startups in the ESG space, it clearly tells you there's no framework that is usable for everyone. It also clearly tells you that my E, the Christian Kronseder E, is different from Stefan's E and different from Stefan's S and different from my G. Which makes it very difficult for the end investor to really differentiate, like, what am I actually buying if I buy an ESG overlay on CAC 40 or an SMI here in Switzerland. So from that point of view, I find it very problematic, ESG investing. I totally subscribe to the idea. We all have to become more sustainable. That's some sort of prerogative of everybody who's in business. But I am very skeptical that this is going to be really great, because what we've seen in the discussion with our buy-side prospects and clients is that they tell us, well, at the end of the day, if my ESG portfolio doesn't deliver, they sell it, and they want to have return.
Yeah.
So there's a discrepancy and a gap here. So I think in terms of implementing it, I'm very skeptical.
So we talked quite a bit already about AI. Is there something else how you basically leverage it, and maybe a comment on how you think it will change the index business?
So I'm not sure whether you know this, but I used to be a guest professor for data science for a couple of years at the local University of Applied Sciences. So I had some sort of really deep dive into AI, and also I dabbled in AI since 2010. It was called data mining at that point. I think where it comes in indexing in is not so much in building indices, because deep learning is a black box, and you can't sell a black box product into a regulated market. This doesn't work. But where you can use it in indexing is either by helping to select and build a rationale for an index. So it's as we have with our specialized search engine, so for thematic investing. But I think the biggest leverage you will get in AI and indexing is actually in operations, because there are a lot of jobs. And my prime example is like managing corporate actions. That's some sort of a super tedious job, but you have to be really into it. You have to be really focused. And these are, in general, those type of activities where AI is really good at. So you have to have a certain, and you can't do this for 8 hours. So this is a support tool to help you manage tedious tasks that require a certain mental capacity, but are very routine. So that is a clear one is corporate actions. I repeat myself. Another one is data cleansing. And the third one maybe is creating fact sheets with a narrative around it. So we take different sources of structured and unstructured data and create a narrative on why is this particular index the best index you've ever seen on this planet.
Fantastic. No, Christian, that has been extremely insightful. Thank you very much. There's always 3 questions I like to ask everybody right at the end. Start maybe a little bit sort of philosophical. What is sort of your definition of success?
Closing my laptop and be satisfied and content at the end of the day.
No, that's a very succinct answer. I like it. And if once you close your laptop, or maybe you still need to leave your laptop, but sort of I always like to ask, what is on the top of your current music playlist?
I'm a little bit hard pressed because I'm biased here. So of course my son's music.
Yeah.
But I'm very diverse. So currently I listen to Baroque operas, but this might change next week to another playlist on ambient music. So, but this week it's opera.
Now, last question in here, and then I'll let you go. If people like what they heard and they would like to get in contact with you, how do they reach you?
By email, very easy. It's ck@allindex.com. We kept it short, or on LinkedIn, and happy to have a discussion any time of the day.
Thank you very much, Christian.
Well, more than welcome, Stefan. As usual, a pleasure talking with you.
Nalu FM Finance Podcast. Insight into the financial markets.
This podcast is powered by Vesta, the engine behind active management. Vesta is a Switzerland-based fintech startup that provides software for issuers of actively managed certificates to automate their value chain fully. Visit Vesta, VESTR.com to schedule a meeting with an expert and to learn more about Vesta.